Would you believe me if I told you that someone turned $5,000 into over 100 million with a win rate of just 30%? That's right, lower than flipping a coin, lower than your odds at a Vegas casino. Sounds impossible, right? But it's true. The man who did it is Christian Qullamaggie, one of the most disciplined and data-driven traders alive today. And in this video, we're going to break down exactly how he did it, step by step. Part 1. Who is Christian Qullamaggie? Imagine starting your trading career not on Wall Street, but in a small apartment in Sweden. No fancy Bloomberg terminals, no investors backing you, just a laptop, a dream, and $5,000 of your own money. That's how Christian Qullamaggie began. A Swedish trader, but one who trades exclusively in the US stock market. Unlike hedge fund managers or social media gurus, Christian has never managed other people's capital. No clients, no outside investors, just his own account. Every win, every loss, every dollar of risk is completely his. That's what makes his story so different.
He started his trading journey around 2011 with roughly $5,000, a small account by any measure. But like most traders who start out with passion and no real plan, his early years were brutal. Christian went through the same pain every beginner does, except he was honest about it. He's openly said he blew up his trading account 3 or 4 times in those first 2 years. Imagine that, saving up, rebuilding, losing it again, over and over. But instead of walking away, he treated every failure like a tuition fee, the cost of learning how markets really work. He started studying the greats, people like Jesse Livermore, William O'Neill, and Mark Minervini. Not just their wins, but how they thought about price, volume, and human behavior. He realized that successful trading isn't about predicting the market, it's about aligning with it. He stopped chasing hot tips or indicators and started focusing on raw price action and momentum, the simple truths that never change.
Around 2013, everything started to click. After years of testing and failure, Christian built a system that matched his psychology. A momentum-based, trend-following strategy driven by data and strict rules. It wasn't about finding the next big stock. It was about identifying strength, managing risk, and repeating the process with discipline. That shift changed everything. From that moment on, his results began compounding. Not overnight, but steadily, year after year. What started as a few $1,000s grew into tens of millions. And by 2025, estimates suggest his trading profits have exceeded $100 million, all from trading his own account. No investors, no luck. Just focus, discipline, and the power of compounding through consistency. His story isn't about luck, as many traders have said. It's about consistency, discipline, and understanding how markets truly move. Christian Qullamaggie's rise is proof that you don't need a perfect system. You need a process you can follow through every market cycle, without emotion and without ego.
Part 2. His trading strategy. 1. The right market conditions. If you follow Christian's interviews or study his trades, one thing becomes obvious. He doesn't try to fight the market. He doesn't trade every day. He doesn't trade every week. He trades only when the odds are on his side. For him, the market itself is like the tide. You can't control it, but you can decide whether to swim with it or against it. When the wind is at your back, you don't need to fight the market, you ride it. That one sentence captures the essence of his philosophy. So how does he know when the wind is at his back? He keeps it incredibly simple. Christian defines a favorable market as when the Nasdaq Composite Index, the benchmark for growth and momentum stocks, is in a clear uptrend. More specifically, when the price of the Nasdaq is trading above the 10-day exponential moving average, EMA 10, and the EMA 10 is above the 20-day EMA 20.
In other words, Nasdaq greater than EMA 10 greater than EMA 20,
The market is trending up. This may sound like a small detail, but it's the foundation of his entire approach. When this condition is met, it means institutional money. Hedge funds, pension funds, mutual funds are in buying mode. Momentum stocks are breaking out. Liquidity is flowing. That's when Christian steps in aggressively. When the opposite happens, when the Nasdaq dips below those moving averages, he steps aside. He doesn't try to force trades in a choppy or declining market, and that's one of his biggest edges. While most traders feel the need to always be in a position, Qullamaggie has no problem sitting on his hands for weeks. He understands that not losing money is a form of making money because it keeps him ready for the next opportunity when the tide turns.
He also has short setups, yes, but even he admits that most of his profits come from bull markets. Why? Because growth stocks behave completely differently in uptrends. When the market is healthy, breakouts follow through, volume expands, and strong stocks get stronger. In bear markets, the exact same setups fail over and over again. "My biggest returns always came when the market itself was trending up," he once said. "When institutions are buying, you don't need to be a genius. You just need to hold on." That's why, before taking a single trade, Christian always checks one question first. Is the market helping me or working against me? If it's the former, he pushes the gas. If it's the latter, he protects his capital. And that mindset alone separates the pros from the amateurs. Because in trading, it's not just what you buy that matters, it's when you buy it.
2. Finding the strongest stocks. Once the overall market is in an uptrend, Christian narrows his focus to the leaders, the stocks already showing strength long before the crowd notices. He doesn't chase cheap or undervalued names. He looks for the ones that are already winning, stocks that have outperformed the market over 1 month, 3 months, and 6 months. This is pure momentum trading, built on the principle that what's strong tends to stay strong. Strong stocks get stronger. That's the core of momentum trading. Christian uses simple performance filters to find them. Anyone can do this. Just open TradingView, go to the Performance tab, and sort by top gainers for the last 1M, 3M, and 6M periods. The names that appear on all three lists are usually institutional favorites, the true leaders of the bull market. He's not looking for hundreds of stocks. He only needs a handful, the top 5 or 10 that consistently dominate their sectors. These are the names where big money is flowing, volume is expanding, and breakouts actually work. For Christian, the search isn't about prediction, it's about alignment. He simply rides the wave of strength already in motion.
3. Trade setup, entry, and exit. Christian Qullamaggie's entire trading philosophy can be summed up in one timeless idea. If you study thousands of great stocks over the last century, you'll see they all move in stair steps, strong rallies, consolidation, and then another leg higher. That's how markets breathe: expansion, contraction, expansion again. And that's exactly how Christian trades, by riding those stairs one leg at a time. He doesn't predict when the next big move will come. He simply waits for the pattern to form, and when the odds align, he strikes with precision. Let's break down how he plays each stair of a winning stock.
The first thing Christian looks for is momentum, a stock that has already proven itself by making a powerful move, usually plus 30% to plus 100% or more in a relatively short period. This initial surge tells him that institutional money, the real driver of price, is interested. Because retail traders don't push stocks up 50% in a few weeks. Big money does. Once that first leg happens, he doesn't chase it, he waits.
Because after every strong rally comes the inevitable pause, a pullback, or what professionals call a consolidation phase. During this stage, early buyers start to take profits, price cools off, and the stock begins to move sideways. Most amateurs get impatient here. They either buy too early or give up entirely. But Christian knows this is where the real opportunity starts to build.
Now, the game becomes one of observation. He studies how the stock behaves during the pullback. If the stock is still under accumulation, meaning big institutions are quietly holding their positions or adding more, you'll see a key clue on the chart. Volume starts to decline gradually from left to right. That's a telltale sign that selling pressure, or supply, is drying up. No one's dumping shares anymore. Instead, price begins to tighten, often coiling around the 10-day or 20-day exponential moving average, EMA 10 or EMA 20. This is what Christian calls the base building phase. The tighter and more controlled the base, the more explosive the breakout can be. Because when a stock trades in a narrow range, it means buyers and sellers are reaching equilibrium. And once that balance breaks, price moves fast. He doesn't guess when that will happen. He simply waits until the chart shows him, until volume spikes and price breaks above the resistance level that's been holding it down.
When that breakout happens, that's the green light. That's when Christian enters. No hesitation, no second guessing. His stop-loss placement is equally methodical. If the base is tight, he places the stop-loss just below the base. But if the base is wider, he places the stop-loss just below the breakout candle. Why? Because that's the level that invalidates the setup. If price falls back below that zone, it means the breakout failed, and he's out immediately. This is where his discipline shines. He doesn't widen stops. He doesn't give it more room. He keeps losses small, typically between 0.5% to 1% of his total account on any single trade. That's why he can afford to lose many times in a row and still come out ahead.
Once in a winning trade, Christian follows a simple but powerful exit plan. Rule 1. If the trade moves favorably right after entry, he takes partial profits, around 1/3 to 1/2, after 3 to 5 trading days. This locks in gains and reduces emotional pressure. At the same time, he moves his stop loss up to break even. From there, he lets the rest of the position run, sometimes for weeks, sometimes for months, trailing his stop along the EMA 10 or EMA 20, whichever the price respects more. When the stop closes below that moving average, the trade is over. No questions, no what-ifs, he exits and moves on. It's simple, mechanical, and repeatable. Let's apply this method to a real-world case, Tesla in 2020. Between March and October 2020, Tesla went on a monster run, climbing roughly 144% from its prior base. That move satisfied Christian's first condition, a strong momentum leg driven by institutional demand. Then came the pullback. After the rally, Tesla started consolidating along its EMA 10 and EMA 20, and volume began to taper off, a textbook sign of accumulation. The stock tightened for several weeks, forming a clean base. Once Tesla finally broke out of that consolidation on a surge in volume, the next 30 trading sessions saw it double again. That's the kind of stair-step move Christian looks for. Following his own rules, he would have sold 1/3 to 1/2 of the position within a few days to secure early profits and moved his stop-loss to break even. Then, as the stock continued to climb, he would trail the stop along the EMA 20, which Tesla respected perfectly during that run. When it finally closed below the EMA 20, that was the signal to exit completely. This disciplined process, from entry to exit, captures the heart of his philosophy. All I do is cut my losses and let my winners run.
That single line defines his entire edge. He doesn't need to be right often. He just needs to be in when the next big leg begins and out when it ends. It's not glamorous. It's not emotional. It's just a repeatable system executed with military-level discipline. And that's how Christian Qullamaggie turns a handful of great trades each year into generational wealth.
4. Position sizing and risk. If there's one area where Christian Qullamaggie shows zero emotion, it's risk. His rules here are non-negotiable. When his account was still small, under a few million, he was willing to risk 0.5% to 1.5% per trade. That gave him room to grow aggressively while keeping any single loss survivable. But as his capital expanded into the tens of millions, his risk per trade dropped sharply to 0.25% to 1%. That shift wasn't about fear, it was about longevity. Christian knows that once you have real size, your number one job isn't to make money, it's to protect it. He often repeats a simple truth that guides his entire strategy. Survival comes before profits. You can't win if you're out of the game. To him, trading is not about finding one perfect trade, it's about staying alive long enough to catch the next 100 good ones. By capping risk and cutting losers instantly, he ensures no single mistake can ever take him out of the game. That's why his system works. It's built not on prediction, but on protection.
5. Win rate and risk-reward. If you look at Christian Qullamaggie's trading stats, they might surprise you, because even at his best, his win rate rarely exceeds 30%. That means 7 out of 10 trades he takes are losers, and yet his equity curve climbs relentlessly higher year after year. The secret lies in the math and the discipline behind it. Each losing trade costs him no more than 1% of his account. Those losses are small, quick, and controlled. But when he catches a winner, one of those explosive breakouts that runs 50%, 100%, here's the simplified equation behind his success. 7 losing trades multiplied by -1% equals -7%. 3 winning trades multiplied by +10% equals +30%. Net result, +23% after 10 trades. That's how asymmetric returns work, and why win rate alone means nothing. In rough markets, his win rate can fall as low as 10%, yet he often still breaks even or slightly profits because his losses are capped, while his winners stretch far. My trading log is just a long list of small losses, interrupted by a few huge wins. That's how this game works. Christian Qullamaggie. It's not about being right often. It's about being right big when it counts, and surviving long enough to get there.
The takeaway. So what can we actually learn from Christian Qullamaggie? First, you don't need to be right often. You just need to lose small and win big. That's the essence of every successful trader. They don't fight to be perfect, they fight to survive. Second, trade with the market, not against it. Christian only plays offense when the market gives him the green light, when the major indexes are trending up, volume is expanding, and leadership stocks are breaking out. He doesn't waste energy fighting bear markets or guessing bottoms. He waits, he watches, and he attacks when the odds align. Third, discipline beats prediction. Every rule he's built, from risk control to position sizing, exists to remove emotion. He doesn't chase, he doesn't average down. His entire system is a safeguard against his own impulses. Trading isn't about excitement, it's about execution. And that's the real takeaway. You don't need special connections, insider info, or a PhD in finance. You need structure. You need patience. You need to think like a professional, even if you're trading from your bedroom. If this story of discipline and data-driven trading inspired you, smash that like button, share this video with a fellow trader, and if you'd like to support the channel, consider using the Super Thanks button below. It helps me keep creating more deep dive content like this, and who knows, maybe one day you'll become the next great retail success story, just like Christian Qullamaggie.